Thank you, Felipe. And to continue to explore this issue, you can just leave it there. But to continue to talk about the subject, we are going to ask our moderator, Amanda Glassman, to come up to stage again, and she will be moderating the discussion. Also, we wanted to call on the panelists. First, we have the Minister of Economy and Finance in Chile, Mario Marcés. Also, we have Carlos Fernandez Valdovinos from Paraguay, Minister of Finance. And then we have Andres Velasco, who is Dean of the School of Public Policy at the London School of Economics. Great, thank you. So here we have the true artist inspired by Roberto Nata. I am going to be speaking part in English, part in Spanish. My introduction will be in English.
So mobility neutral with respect to inequality. If we measure it by Gini, we saw innovation paradoxically spurring monopoly rents that might have the effect of blocking new entrants. We've seen that lobbying can blunt the growth and impact of innovation. We see that growth is positively correlated with more competitive markets and firm dynamism. Tech transfer is important. Automation and AI probably correlated with total employment. But also the importance of improving human capital with the right skills to either innovate or work in larger, more productive firms. Really important for our region because most of our labor force is in these smaller, lower productivity firms. So all of this suggests that there's space for policy reforms and investments that expand competition, encourage innovation, while minimizing market entry barriers, build firms that are dynamic and resilient, and invest in human capital and regulatory regimes that facilitate and support these goals. But also that better public policies can help support the public interest, people, and the environment in ways that are synergistic with these aims. Now, Professor Agillon posited a kind of provocative conclusion, a sort of extreme comparison, that we should mix the best of the United States of America and Europe. But of course, GDP per capita is $53,000 a year in Europe, while Latin America's wealthiest countries are about $20,000 a year. So how can we translate these insights into real-world policies that improve lives? I'm pleased to be accompanied by Minister Mario Marcel, the Minister of Finance of Chile, formerly President of the Central Bank of Chile, Director of the Global Good Governance Program at the World Bank, previously of OECD, and perhaps most importantly, formerly of the Inter-American Development Bank, also a very widely published author. Minister Carlos Fernandez Valdovinos, the Minister of Economy and Finance of Paraguay. He was also previously the governor of the Central Bank of Paraguay between 2013 and 2018, and represents Paraguay at the board of the directors of the Latin America Reserve Fund, FLAR. And finally, Andres Velasco, the current dean of the School of Public Policy at the London School of Economics and Political Science. He's a Chilean economist who served as Minister of Finance in President Bachelet's first government and has also held academic positions at Harvard and Columbia. All of them have published extensively, so it is un panel de lujo. Ahora cambiamos al ministro. So, how do you interpret these ideas that we've been talking about today with Professor Agillon, how to bring these ideas to Latin America? I just want to note that in the last panel, Bernardo Larraín of Colbún, which I guess is a Chilean utility company, noted that the regulatory regime around mining in Chile, even of a clean energy mineral, required more than 5,000 regulatory permits. And I think you made this point yesterday in the FT panel. Permisología. So tell us a little bit about how our countries, our region, can take advantage of these ideas.
Okay, well, thank you very much, Amanda, and good afternoon, everybody. It was a great presentation by Professor Agillon. Paso al español.
I'll be speaking in Spanish. Let's see. I think that when Professor Agillon was talking about this idea of combining the United States and Europe, what he was emphasizing was the way in which innovation is part of a way to resolve this supposed tension between inequality and growth. And when we talk about innovation in Latin America, where we have not only problems of inequality, but also we have a problem of low growth, and where productivity trends are also downward. And in Chile, we talk a lot about a stagnation of productivity, as if that were a problem only for Chile. But we can see that this affects other countries too. That's something we've seen in these seminars. So we have to ask ourselves the question, how countries where productive capacity is very highly concentrated in the area of natural resources, how can those countries incorporate the topic of innovation? When we look at specific industries and their challenges, what we find is that natural resources industries are also innovation intensive, and they have to become more and more innovative, in part because of the regulations themselves. Because when we were talking about extractive industries, et cetera, we're talking about mining as a dirty industry in the past. In other words, with a poor reputation. What we see today is that all mining industry, especially copper mining, is moving in a direction of a greener industry. And they are transforming their processes. They are changing their water use, energy use, and that is the major innovation in mining right now. And that's something that we're witnessing here in Chile. And that requires a lot of innovation, not only on a very large scale, but also on a smaller scale too. And that is what is happening in mining, but the same applies to agribusiness, exporting cherries to China some years ago could have seemed unthinkable. But now, this summer, that was the strongest boost to economic growth in Chile. Energy generation. Mr. Larraín was talking about energy, and they no longer are building gas-powered installations, but now they are talking about wind-powered facilities. And that requires a lot of innovation, a lot of innovation. If, in addition to that, we think through what it means to develop an energy grid that is based on renewable energy. That, in turn, is something that gives rise to other energy-intensive industries that in the past was unthinkable because of our dependence on hydrocarbons. Now, if we think about green energy, not only do we have chemical and industrial processes, but also we have the challenge of transporting green energy from Chile to other places in the world. So I did want to refute the idea that economies that are based on natural resources are poor economies. And also, this has to be linked to equity, and that has to do with to what extent innovation occurs in a horizontal fashion. In other words, across large corporations, and where there is room for smaller companies that can innovate, can grow and compete with larger firms. But that is something that we can leave for some further discussion, later discussion. Now, Minister Valdovinos, what would you say about Paraguay? Paraguay has a very open economy, is relatively small, but how is Paraguay adapting to these new realities? How can you promote innovation and competition? Well, first of all, I wanted to congratulate you, Felipe, for your presentation. The truth is, after your presentation, it makes the rest of us, the three of us, look like we are in slow-mo. So that passion. I was acquainted with your academic reputation, but all of this activity, we only see it in our stadium for soccer games. But no, you touched on some very important topics. And education, everybody talks a lot about education. So all I'm going to say is that what we have to give people, we in public policy say that we have to give people opportunities to get an education, an opportunity to have good health, an opportunity so that with human capital they can find better jobs. So I just wanted to bring that in. Often we don't talk about two other things, and that is innovation and entry and exit of firms. That's important. Latin America has a lot to be done in terms of facilitating business. And why do I say this? Because exits are easy because companies may go bankrupt, although I do want to say that we need a good bankruptcy law so it can occur in a disciplined fashion. But often it's entry of firms that's hard, facilitating doing business, and that in several countries of the region. Any indicator that you use shows that this is a serious problem. We take this very seriously because we can have all of the macro that you covered, but if an investor comes in and because of red tape, because of what Mario said about all the paperwork, everything that has to be done to get permits. So we made major efforts in that direction. Yesterday, or last week it was, they published an indicator from the Anda Smith Institute in the University of Florida. And Paraguay turned out to be the country where it was faster to open a business. It was less than 2 weeks where people could get everything. And we have to facilitate the entry. Entry means new people, new thinkers, new ideas. And that is what really does produce innovation. And that allows us to have economic growth. It opens up opportunities for people so that they can move along the social scale. So in that way, if we make it easy to do business, that will be key for the entire region. I have several ideas in my head, but one more thing, taking advantage of the fact that this is an IDB event. We talk a lot about what governments can do as part of public policy, but here we're going to see our governors discuss two things that are important for innovation in the future, and that is what we did with IDB Lab and what we have done with IDB Invest, and that is to strengthen them financially so that in the future they can be the right financial instrument. Because what is the problem? Innovation, if we do things quickly, it's not like Google that began in a garage. It's a little company that doesn't have any access to financing. So it's tremendously important to have financial lines open to businesses. Now, in Paraguay, we have done a great deal through the National Banco Nacional de Fomento, National Development Bank. We launched a product for small companies because you can have great ideas. If you have no funding, you cannot realize the ideas you have. So we have to work together. Governments have to work with multilaterals so as to provide that financing, which is absolutely essential for everything that we were discussing or that was covered by Felipe. So I'm going to stop here. So those are just my initial ideas triggered by this excellent presentation. Thank you, Minister, and thank you for mentioning IDB Lab. They are an important arm in the world of multilateral banking. It tries to finance innovation because venture capital worldwide is concentrated on the northern hemisphere. Now, Professor Velasco, what would you say is behind the growth that we're talking about? What could you say about this comparison between Europe and the United States, and what does it mean? Are you talking about the United States today or a couple of months ago? Well, First of all, I want to thank Enrique Parrado, the chief economist at the IDB, for inviting me. It is a pleasure to be here with Felipe Aguillon, and it's also great to be here with the ministers. I'm a mere academic, but these are the people with the money and the power. Now, I think that that is what we know. The thing is how. And Philippe said that. He spelled it out. And that is that societies don't grow unless productivity rises. And productivity rises with innovation in societies. Mario added that innovation isn't only in high technology, it could also occur in agriculture and technology. And that requires a group of institutions. We more or less understand them, know about them. And what is important is that this does not clash with greater quality. Quite to the contrary. There is, for example, a society that provides greater guarantees, greater security, that provides for greater ability to innovate because people know if they fail the first time, they can get back on their feet and innovate again. So in Latin America, it's not that we don't know what we need to do, it's how we do it, because it's hard for us to make decisions in democracies that have to be protected and fine-tuned. But if we are candid, they don't work all that well. It's hard to reach a consensus on important topics, and where the debate on growth often takes another tack. I don't want to get into the debate about how important taxes are. There's a lot of literature on that. But if I look at newspapers in Latin America, it would seem that the only thing that guides the course of growth is whether or not the Minister of Finance raised or lowered taxes. But that's not the only variable. Now, something is important that Philippe said, and for there to be innovation, there has to be competition, because the people that innovate, that become rich, say, look, okay, I'm doing great. I closed the door behind me so no one else can get in. So the laws that promote competition, free competition, are key. We know what the problems are. Once again, they are political problems. I supported a free competition law in Chile in 2009. We finally got that law passed, but it took us years. We were opposed by the conservative parties. Mauricio Cepeda was here, and he had to promote the second stage of that competition law in Chile, and it was hard for him too. So to summarize, thanks to economists and researchers like Philippe and many others, we more or less understand what the 3, 4, 5 things are that have to be done, but it really is hard politically. And let me give you another example. What countries have a lot of innovation, low unemployment rates? It is countries that have flexible labor markets where you can hire at will, lay off at will, but where laid off workers have some security. Now, I proposed that when I was Minister of Finance. I went to Denmark. I invited the minister to go with me, and I confess it was a great idea, but it found absolutely no support. 15 years later, I continue to think it was a great idea. So the problem isn't the diagnosis. The problem is how can we reach an agreement to put these ideas in practice? And that is where many countries in Latin America fail. And you have a book about the importance of political viability, right? Great. So we will look forward to hearing more about that in our next annual meeting. With this, I give the floor back to Minister Marcel. We heard about the political challenges and how they can be a constraint. What would you say about the relationship between growth and inequality? How do you balance those issues having to do with security, worker protection, with these policies having to do with competition and easy entry and exit from the market?
A ver, el,
I think the issue of protection, we need to think about what it is that we want to protect. When it comes to workers, when one looks at a worker's life cycle, obviously it's not just remuneration. There's also mishaps along the way, losing one's job, disease, aging, falling victim to crime. And the problem is that one of the biggest factors that generate inequality is that when poor people face those challenges, they have no assets to protect themselves and to recover. So this idea of flexi-security or flexible security, we need to see to what degree can our systems buffer the effects of those mishaps. What happens to employees, to workers, also happens to companies and economies. At the economy level, obviously, we have economic cycles, but in Latin America, quite frequently, we have natural disasters. At the level of firms, companies make mistakes, but they also have success. And when we speak of firms, the concept is of these contingencies is all over the place when it comes to smaller companies. Many times, international organizations are obsessed with smaller scale companies. However, many times their approach to that sector is based on protection, that is, keeping things more or less as they are instead of adopting an approach based on promotion. That means making sure that small companies can grow, can innovate, and compete with bigger companies. In Chile, a few years ago, the central bank ran a study on productivity at the firm level, testing their hypothesis, measuring ins and outs and changes in productivity, growth. After that, there was a labor market study to assess mobility within the labor market. There are two things that happen in Chile that I think explain what we see in terms of productivity. First, the most productive firms are not the ones that grow the most. Secondly, there is a lot of mobility within the labor market. There's a lot of turnover. But that turnover is one where employees aren't necessarily moving to more productive firms, nor are they necessarily getting better salaries. So what's behind these two phenomena? On the one hand, you have the fact that in policies that we have to protect small firms end up imposing a big tax on growth. On the other hand, market concentration means that incumbents end up with mechanisms to protect themselves from any challenges that might come from smaller companies. Obviously, that in itself poses a big challenge for public policy. There's an important group of an association of small companies. I see one of their leaders here in this first row. We work with them to design an income tax that would create a very simple mechanism for formalizing micro enterprises through a single tax system. that also allows most small companies to be a part of a transparent taxation system. And then there is a transition for them toward a more mainstream tax system where they get tax credits that they generate as they are a micro enterprise. In other words, it smooths out the transition toward becoming a larger company. That is something we discussed a few days ago with some of the opposition members of parliament, and we told them of all the things that we're doing, this tax approach is not something that we are going to discard because we think it's very important for our economy, for the ability to generate more productivity, to reward innovation, and to create competition. So all of this certainly relates to distribution. We're talking about turnover in the labor market. We're talking about social protection and mobility for companies. And that, in the end, is what allows us to connect innovation with equity and social protection. It's a very interesting initiative. We will be monitoring its evolution. The minister from Paraguay has had maintained macroeconomic stability in a difficult moment. I really commend Paraguay for reaching investment grade. The policies that contributed to that stability, how was that done, and how has that stability led to more productivity? Thank you for that. The fact is, thankfully, we have some resilience in order to face the challenges of this changing world. There was a mention here of whether things have changed a lot before or after January, but that's just one shock of many shocks that we have to face. So we need to be resilient. As the president of my country has said, Paraguay's advantage is that it lives in quite a complex neighborhood. We're surrounded. We have two giants that don't always behave very well. So for 200 years, we've been dealing with volatility around us, and that has given us some degree of resilience. As I've always said, a crisis is also an opportunity. It's a matter of looking at it that way. For example, we're now looking at a trend toward greater protectionism. Well, we are talking about right now about protectionism basically with the United States, not widespread. But as a journalist asked me recently, so what happens if you face a 25% tariff on Paraguayan meat? Well, I trust that Paraguayan beef is of good quality. If it doesn't go there, it will go elsewhere. We have many other places where we can export. I hope that we can get Mario here to eat lots of Paraguayan beef. So we have other markets. If one market closes, we'll look to open another one. So we need to start with that. We can't get obsessed with only one destination, even if it's the most powerful economy in the world. In our case, specifically, what we are looking for is to be a much more part of the region. People ask us, why do you have a relationship with Taiwan? You're missing out on China. And we say, yes, but China is millions of kilometers away, and I have China right next door. Who's China next door? It's Brazil. So what we're leveraging is economic productive integration of the Paraguayan economy with Brazil. That's our giant. And if Brazil has to import in order to grow, for example, we provide assembling for the auto industry. There's 3 million cars sold, whether it grows or not. If it grows, it's 3.5 million. If they don't grow, it's 3 million in auto sales. So we have to sell auto parts for 3 million cars every year. So we're making the most of those regional advantages, which we haven't used to the full potential. that's good from the macro side because people can invest, innovate, grow. If you don't have good macro conditions, then you have nothing. So that's, I say, that those are the four legs of the table: monetary, financial. There's four legs to that table, which is the macro economy. That's how you build an economy. Sometimes in Latin America, one of the table's legs fails and everything comes tumbling down. But when it comes to macro economy, we need to take it seriously. We need to go back to the basics. After the pandemic, there's been a lot of chaos at the macro level, so we need to converge again. Also, we need to speak about innovation, opportunity for people, because if we don't, we won't have the economic and social development level that we all want, that we all desire. So we very much focus our future strategic plan on the macroeconomy and then adding to that with other issues. Another matter you asked about policies that we implemented. It's the same policies as always: fiscal, monetary, within an independent central bank. Instead of that, I'll tell you a story of what happened when I got to the central bank in 2013. They were about to publish a book on 70 years of the Guarani. Our currency is now 80 years old. The 70-year anniversary of the Guarani back then. The book was called Guarani, a Symbol of Stability, something like that. And what I want to highlight is the end of that. It spoke of conquering society. And why did the book say that it had conquered a society? Because it did not rely on the administration, the government, the current government. It's people that will not allow for a two-digit inflation or fiscal disorder. That's the important. I think the secret of success in Paraguay is when society believes that this is the basis for building an economy. When you have that, that is half of the work done that you need in order to achieve development in our countries. Right, I agree. And I think that ties in very well with the research being done on the viability of policy, of state policy. Tell us a bit your views on that. Having heard Carlos, first thought, I don't want to be so pessimistic when we speak of Latin America. It's always easy to talk about things that we haven't done or things that we've done poorly, but you provided an excellent example of something that we do well. I am old enough to remember that 30 years ago, there were people that would come to stages like this and say, no, fiscal deficits don't matter, inflation is structural, there's nothing we can do about it, etc. As far as that, first of all, in Latin America, we've learned, and second, we have created political consensus and institutions. Central banks in Latin America, with a few exceptions that I'm not going to mention because I don't want to anger anyone, the central banks are now serious, professional, credible institutions. We have two central bankers here who have become ministers of finance, and that's a great trend. As all of you know, the last inflationary boom in Latin America, central banks raised rates. They reduced inflation before the U.S. and Europe, something that 30, 40 years ago would have been unthinkable. So that's a first thought. We don't do everything wrong. There's consensus that's been created that becomes means policy becomes socially accepted. We need to be careful about that. And the second question is, how do we do that, but in other areas? I think it's possible. A labor market that has flexible security. I'll spend another 30 seconds on that same example. That's a labor market where everyone wins, where workers have more choices when it comes to leaving their job for a more productive one that's better paid. However, if it's a mistake, if the company goes bankrupt, then the state will support that person, but also provide a more generous unemployment insurance than we have in the region. Is that easy? No, it's hard, because one thing I've learned is if you change a single part of the labor law, you have people popping up everywhere, but it certainly is something that can be done. You mentioned a book that I've been working on. I'll do a little bit of promotion here. It has to do with our discussion here. Tim Besley, another colleague at the LSE, about a year ago, we invited 16 other colleagues to take part in the following exercise. It's this year is the 35th anniversary of the Washington Consensus, and we asked our colleagues during those 35 years, what have we learned? What have we learned as far as trade policy? Philippe and Jean-Marie contributed with a chapter on innovation and growth, macro, micro, monetary exchange policy, and the rest. The book will be published in a few weeks. You can buy it. It's a Christmas present. But what I'm trying to say is that two things happened during those 35 years. The world changed. The rise of China, the axis of development shifting over from Europe and the United States to Asia. However, the economy also changed. And there are todays that we understand much better, much more so than 30, 40 years ago. The Washington Consensus on Growth, you would tell me, what is that? Yeah, it was pro-growth. But go reread that document and you'll see that the word growth appears once in that original Williamson work. And it is talking about export growth, because in 1989, we were still operating under the idea of a very basic understanding of growth. The idea was liberalized prices, markets will do their thing, and we end up with an efficient economy that is static. And that is the way to make the economy more efficient. What do we know now, 35 years later? That if you undo all rent, there is no growth. Because as we learned from Philippe, those that innovate in order to acquire rent. Those that in a few months created the COVID vaccine, they didn't do it in exchange for some treats. They did it for rent, because I patent a vaccine. The key there is that revenue is not forever. The patent expires. The key is if I get too big, too fat, too rich, where I'm smothering others, and we need to avoid that. So that is what we learned on growth. We've learned that in a variety of areas. And what I sometimes fear is that lesson from academia does not always materialize in debates on policy in the region, because we continue to have these very old-fashioned debates. Taxes are going up, taxes are going down. That's one of the 15 potential debates that we have, but there are so many others that are important to have. We spoke of education for a long time in Chile, 7 or 8 years talking about education. It turns out we talked about everything having to do with education except what was most important, which is how do I make it so that a child with little social capital can learn more. We talked about whether education should be public, private, for-profit, non-profit, this way or that way, but we spoke very little about what I do today, which is what happens inside the classroom. So my promotional spot here in this book, as in many others, it's not the only one, but what we did in this book is we tried to summarize what it is that we've learned over 35 years, so that hopefully in the following 35 years we don't get stuck in those debates of the past that have become a bit boring. We should start thinking about the debates that actually lead to something. I hope so. Well, thank you very much. We have a question from Michael Pure.
Best ways for governments to democratize access to capital, i.e. improve access to capital for small and medium enterprises. And maybe you could combine the answer to that question with some wrap-up comments as you reflect back on the professor's presentation. Maybe starting with you, Minister.
Sí, bueno, democratizar el acceso.
On access to capital. Access to capital, first you require highly developed capital markets that can provide long-term finance in local currency. And You need a society that can save for that, a financial system that is efficient in creating tools for savings and investment. When it comes to small firms, one important issue there is risk, managing risk, and the mix of capital for investment and working capital. There are risk management instruments that governments can utilize. In a lot of the world, let's recall, during the pandemic, a series of guarantees were created in order to have a credit behave in a counter-cyclical fashion, and that's what happened in many countries, in fact. What happened during the pandemic is something that we can apply perfectly well to to smaller companies. That's as far as credit. When it comes to capital in and of itself, venture capital is an industry that, to a large degree, allows us to create that link. There are public policy mechanisms, regulations, incentives that exist for that. Funds that can contribute to other funds that contribute to that. So there are mechanisms in place. If we look 20, 25 years back in Chile, we'll see that access to credit for small companies was basically non-existent. And it was a state-owned bank that started offering credit lines and financial mechanisms combined with other programs that led to greater access. But there's still a big gap to close. And moving on to the wrap-up, what I would say is that we should think about innovation that emerges from different sections of the economy. We talk about equality of opportunity. The equality of opportunity to innovate is probably one of the more important mechanisms there for social mobility and for achieving growth. Just as Philippe's father used to be an artist, if I understand correctly, my father was a small business owner. He set up a solar panel in 1974 on our house. We would shower with lukewarm water for many years. However, his ability to see a future in something that we can all see today. Think about that. This is a small business owner who innovated at the household level. So if we can build on that path, I think that we can get to much more vibrant, innovative economies, and we will have no reason to be ashamed of having natural resources-based companies. We need to look at our system of permits as something that enables investment, not obstructs it. That's what we need in order to respond to the challenge of growth. Thank you very much. Very quickly, because we're over time. The heart of the question is it's a very basic question, but it's important for all countries. That's financial inclusion. That's critical, and it will continue to be so for all countries in the region because we, in fact, have a lot to do yet. There are many people that are excluded from the system. They have no option, not for spending or investing, much less innovating. So we have a lot of work to do. And as Mario was saying, perhaps we're far behind compared to Chile, but we're working with the National Development Bank to make sure that small companies have access to credit. We have some very promising initial results, but we need to go beyond that. it can't be the government offering lines of credit. It needs to be banks. And we're not going to see the 5 biggest banks in the world lending in Paraguay to small businesses or outside of the capital. So we need specialized banks that specialize in small and medium-sized businesses. We need to welcome that. And one thing I see as a key factor to improve access to financial systems and therefore by have more financial inclusion is technology. Technology is essential for access. I'm not sure if I have it. I do. My phone, this is no longer just a phone. This is everything except a phone. I think that's probably what we use it for the least, to speak. But for us, this has been critical for financial inclusion in Paraguay because it's everywhere in the country. Traditional banks have their offices, but they're not everywhere. They're not out in the middle of El Chaco in Paraguay. The use of technology, the information transactions that one can do through these sending and receiving money, that is very important. Technology it provides the access that we need because in the end, this is what creates work in Paraguay. It's people and we need to include them in the financial system. It certainly is a revolution. To conclude, just two ideas to wrap up. On small companies, Mario said this in a very ministerial fashion. I'll say it non-ministerially. The problem with policies aimed at small businesses in Latin America is that they doom them to be small forever. The idea is to have small ones become medium ones, and then the medium ones become big ones, and the big ones become very big ones. In our region, that doesn't happen. There are studies after studies after studies that show that if you look at the breakdown of company size, Latin America is an anomaly. Why? Because we're full of micro enterprises that never even become SMEs, much less medium or small or large companies. And sadly, these are companies with very low productivity. So we all agree, micro, small companies are a really nice thing. It'd be nicer if they became big. That's idea number one. Idea number two, I want to celebrate the fact that we're talking about growth because we went through a moment in Latin America a few years ago where growth was a dirty word, it was a neoliberal concept, and all the rest. And obviously, that is a huge mistake. A colleague, great friend of mine, Grant Pritchett, he wrote a series of papers where he documents the fact that there is no country that has truly made a dent in poverty, exclusion, and inequality without increasing per capita income. All human welfare indicators on the UNDP are highly correlated with income. Therefore, to suppose that we are going to achieve social integration without innovation and growth is absolutely a contradiction, given the theory and experience worldwide. Therefore, growth is not a conservative, neoliberal, old-fashioned concept. It's the other way around. It's an instrument, not the only one, but it's a key instrument to improve the lives of people in the region. So thank you, IDB, for putting this issue on the agenda. Thank you very much, Andres. Growth, productivity is the core of our new strategy. Thank you all very much. Thank you to the audience, and until next time.
Agradecemos a nuestros panelistas y nuestra moderadora.
Thank you to our panelists, our moderator. We have reached the end of the day that I'm sure was useful and also one that will lead to more conversations in the future. The event is available. You see the QR code online. Also, we'll see you tomorrow, 9:30, for the business forum in this auditorium. Thank you. Good afternoon.